Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what you see here is 1, 2, 3 days of 100-day exponential moving average resistance. Okay, the bulls are running out of time to take this higher. They really can't let the bears have the day that they're already having. Right now, we're down 11 handles on the Globex. If they push through, if they push below 97, where they've bounced it twice in the overnight, here and here's the 5-minute chart, you're seeing support for the moment at S2 down in the 97s. You're seeing resistance at S1 up in the 05 area. What you saw last night and into yesterday's close was you saw a push back up to the 14 area. 14 failed again. They tried to take it back up. They made a lower high in Globex, another lower high, and then what you saw is daily pivot resistance, Europe, opens, and we go down. So these last couple of days with literally no movement, and I mean literally no movement, the opening RTH print for the last 2 days has been 2007. I didn't even have to move the line on my chart yesterday. And we gravitated above and we gravitated below, and until the last little pop into the close, that was where we were going to be. But that pop into the close yesterday has been sold. So as we head into today, I want to see what S1 does when we get into the regular session, and I want to see what the daily pivot does, more importantly. If either of these areas hold as resistance, that's an area where, the bears could get a short going for a pushback to 97. If they push it back to 97, 97 needs to break. 97 needs to break. They need to go take a look at the weekly pivot down in the 86 area, and that's really where the rubber meets the road as far as who's in control of the tape for the week. What we will have seen at that point for the last 3 weeks then is that you would have a test of the weekly pivot early in the week, and that test would hold. Okay? If weekly pivot breaks and becomes resistance, then you're looking at the 50-day exponential moving average down at 82, something that we battled over last week, and then, much further down is the mid-band. If the bulls want to take control, probably one of the most bullish things that could happen would be a pullback to the weekly pivot that holds, then you go make new highs. I mean, that's not going to happen in a day, obviously, but for these uber bulls that want to get where they need to go, if you really want to get there, then let them take it back to the weekly pivot and then rip it. I mean, that'll do it. As for the upside, if you see the bears unable to hold 04, if you see them unable to hold the daily pivot, then they've got to get back to 2013, 2014, and they need to bust it. They need to bust it, and they need to turn it into support. If they can do that, then what's waiting for them is the 200-day exponential moving average up in the 2024 to 2025 area. That's the ultimate test of who is in control of the tape, basically on a macro basis, on a longer-term time frame, the true big picture. Okay. This is the longest we've traded underneath the 200-day exponential moving average in more than 4 years. The bears are on longer-term time frames in control of the tape. However, what we've seen recently during this rally, after converting the mid-band and converting the 50, is that buy the dips has worked. Now, what's starting to work is selling any kind of a rally up to the 100-day exponential moving average. If the 100 holds again, then it is resistance that's been tested 3-4 times, and you could really see them lean hard on the market. I don't think the bears want it to go back. They've tested it enough. 3 days worth of resistance is enough. The best thing the bears could do would probably to go ahead and fail the daily pivot, fail the 04 again in the regular session, and just push down and leave it down. That would be the best thing they could do. They're only going to get so many trips up to the 14s, and then old habits set in, and the bears start bailing out of the side, and that's how you get another leg up. So there are a lot more questions than answers today. we're starting to get a little more volatility into the market, so maybe we are now prepared to answer some of the questions that have been brewing for the last couple of days while we've been basically doing nothing on the daily chart. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. We're doing the webinar tomorrow after the close. Sign up for that. Trade them well, everybody.